All right, this is the Cow Guy Close, and I am Scott Shelley, otherwise known as the Cow Guy. And today the market took the producer price index with a sigh of relief. However high it might be, it came in at the expected 10.8% level. Somehow, in these doom and gloom times, a confirmation of a 10.8% producer price inflation number kind of felt like a win at first, right? The reading was right in line with market expectations, but 10.8% is still too high. And even though it was slightly lower than last month's reading, the month-over-month gain doubled. So it's still not very good. But in the big picture, I think this changes absolutely nothing. The Fed meets over the next few days. They're going to ponder the size of the next hike. It's expected to be, or it was expected to be, about 0.5%. But since yesterday's crash, some analysts predict it might be 0.75% and maybe even a full 1%. How will the market react to a larger hike? So many questions and not a lot of answers. We've taken roughly $10 trillion off the price of stocks, let alone the money you use to run your household. My next guest has most of all, if not all, the answers. Please welcome in Keith Fitz-Gerald to the show. Keith, thanks for being on. All right, we're getting poorer by the day. And what happens if they hike 75 points versus 50? I don't think one's really in the picture, but some folks are talking about it.
You know what, Scott? I got to be just brutally honest. This is 6.5 dozen the other. I mean, it doesn't matter what the Fed does. 25, 50, 75, 100 basis points. I mean, the fact of the matter is America knows the Fed is out to lunch somewhere. And that's an insult to people who are actually out to lunch. So, looking at it to me is like the Keynesian beauty contest. They're not going to judge the Fed based on what the Fed actually does. Everybody knows that's ridiculous. What they're going to do is based on how each other react to it. So if everybody panics, then guess what? The markets go down. If everybody decides that simply things are less bad, then the markets go up. And that's about as sophisticated as it needs to be.
And so we've kind of found our feet here today, even though we're a couple hundred lower as I come to the chair. It looks as though now we're going to be waiting and wishing our lives away to see what the Fed's going to come out with tomorrow. But regardless, like you said, you're most likely right. It really doesn't matter. The problem is how sticky is this inflation? How long is it going to be around for? And once we do kind of carve out some sort of bottom, do we get a snap back in these equity prices, or are we going to just plod along maybe 2, 4, 8% for the year?
I've thought a lot about that, burned a lot of midnight oil, in fact, on that one. I think it comes down to three things. Number one is, does sentiment change? Because if sentiment changes, then the markets are going to be gone like a rocket. So three things could happen. We could have a calming in Ukraine. That would do it. We could have a reversal of presidential policy. That would do it. And we could have a Fed that says, hey, we screwed up and here's how we're going to fix it, which we haven't unbelievably heard to date. So to me, I'm going to take the Fed meeting. I'm going to turn the volume off. It's going to be a great substitute for Animal Planet, and I'm going to watch the markets.
Right, because that's where you get the immediate reaction, right? You don't have to know what he said. You can just watch what the market's doing. And so here's where I said, I think that the consumer has just been beaten up so badly, and I think the Michigan's Consumer Sentiment Survey told us that, right? Not only are interest rates going up, but in the weirdest way, in weirdest fashion ever, Keith, everything else is going up at the same time. Your mortgage rate, obviously, any operating loans you have, but every single thing that you spend your money on is getting more expensive. That's the problem. We're broke. And you look at those savings rates. Now, it's a little bit of an anomaly. The savings rate for the wealthy is not really that big of a deal. It hasn't really changed. But for the underclass, it has. And also, they're starting to put more and more on the credit card because they think this is going to be, inflation here is going to be temporary. I don't think it's going to be temporary.
Well, I don't either. And here's the thing is, even if inflation comes down, Scott, the reality of the situation is that prices are not going to come down. And I don't care what the boffins inside the Beltway say about this. They've got to fix supply. They've got to get it back to normal. But the first law of capitalism is you're going to save your own skin. So the companies are going to do that. The profit margins are going to stay high. And guess what? So are prices.
And so just so the viewers can understand what Keith means by that is this. Today or yesterday or Friday, whatever it was, we got an 8.6% consumer price index reading. That's what we're calling the inflation rate. That isn't compared to last year at this time. Well, so next year at this time, if you get a 0% inflation reading, which means inflation hasn't budged, that means we haven't changed from the prices that we're at here today. So the prices stay high, but inflation looks like it's going down, but the prices haven't come down. And that's the real anomaly here, where people kind of get mixed up and think that, oh, inflation's going to be short term. We're going to see it come lower. That means prices come down. No, those guys that reprinted those menus, they're not reprinting ones to take prices lower.
No, they're not going to. You're not suddenly going to go to the gas station and find yourself back at $2 gasoline. Just isn't going to happen. Between the taxes and everything else that's going on, they're going to stay at $5, $6 a gallon. So, President Biden's policies, whether it's politically charged or not, the reality of the situation is national gas average was at $2.38 when he came into office. We're now over $5. If we go to $150 a barrel, that implies $7 a gallon, maybe 10 to 12 on the West Coast, $15 a gallon for diesel if things get really bad. So it's, there's not a way out except to go through this. And that just stinks because the American people, frankly, Scott, in my humble opinion, didn't sign up for this ride, and we're getting taken on a white-knuckle adventure we don't deserve.
Well, it's because they know better than you do, and they know better to do with your money than you do. And I think that, they've been caught in the crossfire, as well as anybody that's running a small business, too, Keith. I mean, it started with the pandemic, and they've been, pushed, from side to side, losing money all the way long because of, COVID, first of all. Then it was trying to get labor. Then it was whether I could be open up or not. I mean, every single time it seems as though small business, and I'm calling farmers in that one, too, because they're a small business. Those are the people that have really taken the brunt of this.
Well, it is, and it's interesting. I talked with John, an 82-year-old farmer in Idaho recently during one of my motorcycle trips, and he just looked at me very matter-of-factly. He said, Keith, he said, you know what? He said, the economy is like the ground I till. He said, every once in a while, you got to let a field over here go fallow so that the other one can grow. This is a cycle. He said, I'm 82 years old. I've seen this before. We're going to come through this. We're going to be here again. You plant the crops that everybody needs. That's how you go to market. And I think there's a lesson in that. I came away from that conversation very positive because he said it with a twinkle in his eye and a smile on his face. We're going to get through this. And the key from an investing standpoint is to find the companies that are going to be there, that are going to get stronger. Oracle this morning was a great example. Stronger earnings, stronger revenues, boosting profits, competing with Amazon and Microsoft. So if you change your thinking around and you quit throwing spaghetti at the wall to see what sticks and you focus on the companies that are actually going to be there, again, you got a shot at getting through this.
All right. That's a great advice, and I love it because it's upbeat, and that's what we're going to end on. Really appreciate you coming on, Keith Fitz-Gerald, coming to us all the way from Seattle. Thanks for being on. All right.